Hello traders. Today is the 14th of November 2011, and happy trading to you all. New York is now open. It's now 15 minutes exactly since New York is now open, almost 15 minutes. Okay, and we are looking at the S&P 500. Okay, S&P 500 on the hourly chart. Okay, using the MACD indicator, the standard MACD 1226.9. Okay, now you see here the MACD has crossed the zero line, above the zero line. Here what I want to do now, I want to sell this S&P 500. Okay, you see the support level here is broken. Okay, so selling now the S&P 500 at 1259, selling the S&P 500 because of what's happening here. Okay, a support level is broken. Okay, so selling the S&P 500 at 1259. Okay, stop loss I will use in this case for the S&P 500 because it's not very volatile. I will use instead 30 people stop loss, 30 stop loss. Okay, now why am I selling the S&P 500? Okay, that's a very good question. Why am I selling the S&P 500? Now, for those of you who are new to us, we are the TSTWS08 traders, and our website is www.stochasticmacd.com. Okay, for all trade, we'll use the 5% money management rules and apply stop loss in all trade. Okay, so right here, right now, okay, we are selling this S&P 500, and we are on the hourly chart of the S&P 500. The standard MACD has crossed the zero line, as you can see here. Okay, and what you need to remember is that when the MACD crosses the zero line, okay, it's telling that there is an increase in the bullish momentum. Okay, it's very important to understand. Okay, because traders are using all sorts of trading tools, stochastic MACD, RSI, CCI, but few traders understand their tools. Okay, and they will trade the indicator instead of trading the price. This is what we are saying all the time. And if you have been watching our video, you will be aware that this is the same message that we are communicating every day to traders, so they can start avoiding the same mistake, because you cannot achieve consistent winning trend if you are repeating the same mistake over and over, because the price is showing you something, okay, and you fail to recognize it, okay, and you keep repeating the same mistake every day. It doesn't help anybody, and it's not very good. Okay, so you have to learn to understand, okay, the trading tools. Okay, now before we move forward, I want to tell you that this video will last only 15 minutes. So at some point I have to pause the video because it's a live trading, because I don't want the video to go over 15 minutes. So if it's dragging on so much, I have to pause the video. Okay, so remember that. So go back again to the hourly chart, looking at the S&P 500. Okay, now when MACD crosses above the zero line, it's saying that there is an increase in the bullish momentum. Okay, if there is increase in bullish momentum, we must see resistance being broken to the upside. It's that simple. Because if the bulls are in charge, we must see a resistance being broken. But if the price fell to break above a resistance level, it means that there is a weakness. So in fact, that will invalid, okay, the surge in the bullish momentum. I hope you understand what I'm saying. If MACD crosses above the zero line, there must be increase in the bullish momentum. Increase in bullish momentum indicates that resistance level must be broken, and the price must start displaying higher lows and higher highs until it fails to display a new higher high. On the other hand, right here, if MACD crosses below the zero line, which some traders like to call the water line, okay, or the equilibrium line. Okay, if MACD crosses below the equilibrium line, it's telling us that there is an increase in the bearish momentum. Increase in bearish momentum means that the support level must be broken. Okay, if the support level is not broken, we know that this is not a valid, okay, a surge in bearish momentum. Now there is one article that we're going to post at hub pages. Okay, www.hubpages, okay, hotel uniform bravo hub pages, pages in plural, hub pages. by the end of this week, okay, look out for that at the hub pages. The title of this article is MACD and the zero line, and in that particular article we explain to traders the zero line, the importance of MACD zero line. And if you watch this video, make sure by Friday this week, okay, the article should be on hub pages, okay, and make sure you watch it, okay, you read it, not watch it, but you read it, okay. So right here we see MACD cross above the zero line. We are expecting the bullish momentum to increase. That's in normal conditions, but look what's happened. The price couldn't break above this resistance here. What is it telling us? It's telling us that this is not a valid, okay, a surge in a bullish momentum. Okay, if you read the article regarding the MACD and the zero line at the hub pages, okay, you understand what we are talking about here. So that's why it gives us a good reason to sell here. But many traders at this point in time will just place order here to buy because they are trading MACD instead of trading, okay, the indicator. You understand now? So MACD is perfectly a valid tool. Like any other trading system, you can have a trading system using this MACD alone. But if you have a trading system and you do not understand the meaning of your trading system, the meaning of the signal, the meaning of the indicator, what is involved, you are likely to make a wrong decision. So some traders here, instead of selling, they will buy, and once they buy, they will blame MACD for it. But it's not the MACD fault, but they fail to understand the message that MACD is communicating to us. Okay, as you can see, we have entered this trade at 1259. Okay, that's our entry point. Okay, it's going down. It's not too bad. Okay, it's not going fast because the S&P 500 is not very volatile and fast financial instrument like the Dow Jones. So you know, this is what's going on. This is not my favorite, okay, financial instrument. I prefer the Dow Jones that go very fast. Okay, so the S&P 500 is quite slow. Okay, so you understand what we are saying here. So the zero line for MACD is a very powerful tool because if a trend is about to begin, the trend will begin when MACD crosses the zero line. But now you have to wait for the price to start displaying higher lows and higher highs. On the other hand, if MACD crosses below the zero line, we are waiting for the price to start displaying lower lows and lower highs until it fails to display a new lower low. The price does not go up or go down forever. There are points where the price will stop and it will consolidate or come back down. The price does not always trend. The price will trend, pause, and trend again. So here, what I'm doing here, by making this accurate decision, as you can see, the price going down. The decision I made is just understanding what the MACD is telling me. MACD cross above the zero line. I'm expecting increase in bullish momentum. Increase in bullish momentum means that the price must break resistance level. Now the price stuck here, failing to break above the resistance level. This is the inverse signal. Instead of buying, I will sell because the price failed to display to break the resistance level. It's that simple. On the other hand, if MACD crosses below the zero line, as it did here, I will expect support level to be broken to the downside and the bearish momentum to continue. When you are selling from one level to the next support level. You understand? If you are buying from one resistance level to the next support, which means if the price comes to this level, this is an excellent place to take some profit if you want to. If you do not want to, you move your stop loss to break even, which means you are risking a zero. Okay, $0 or £0, you bring it to break even. Okay, so you monitor and see how it progresses. Okay, that's what's happening. Okay, so this is just a quick video regarding how you can use MACD alone, just using MACD or any other indicator, and understanding, okay, the tools that you are using. Okay, so what I'm going to do now, okay, I will go back again to my favorite 3-minute chart. Okay, and we see it there. Okay, I have my line drawn already on the hourly chart. Okay, and I will monitor it. If it comes here, I will take some profit and see it again and see what's happening. Okay, so this is what we see, okay, on the hourly chart. Now, like I said to traders, decisions should not be made on one single time frame. Going now to the hourly daily chart, what do we see here now? For those of you who are interested to progress in your trading, taking it seriously instead of chasing trading system or chasing indicators, okay, you will focus on understanding what's going on in this messy market. 5% money management rules. Now, there are losing trades that take place, but Those who use 5% money management rules will remain longer in this messy market. So stop loss for all trade, 5% money management rules, understanding the trading tool. Practice is the key. If you are new traders, it's the process. It's not easy when you are new trader because you are learning and you are making mistakes. But what you need to do is to avoid repeating the same mistake. Avoid repeating the same mistake. If you made a mistake today, learn something from it. Tomorrow, do not repeat the same mistake, but learn from it, and tomorrow take advantage of it. That's what you need to do. And give yourself plenty of time to practice, to test, using the demo account and everything that else, to keep improving your ability to trade, the ability to trade. That's the most important thing. Alright. Now, on this daily chart, we see that the price ran down fast here in this section where I'm moving my cursor. This is what we call the impulsive move, and the price slows down. This is what we call corrective move in the language of Elliott wave. So price ran down, price slow down. It's a correction period. Correction period. Now we have again another impulsive move to the upside. Couldn't go to the next resistance level here. Some traders are watching this level on a daily chart. So run down, corrective move, another round movement to the upside. We are in the resistance zone on the on the daily chart. Alright, can you see that? Paying attention to the price itself. We are not trading the MACD, we are not trading any other indicator, we are trading the price itself, the number one indicator. And MACD here, you can see the slope of MACD on the daily chart is declining. It's bearish. And not only that, the price is not displaying higher lows. We have a very small, nice, beautiful triangle being formed on this daily chart. We will monitor, as I say to you, we'll monitor the activity of the price, following the price itself, the number one indicator. So this is how you will do it properly, like professional traders, without cutting corners and applying the 5% money management rule in order to cream the market consistently. Let's go back again to our hourly chart, and slowly by surely, and understanding MACD itself. What I will do, I'm going to pause the video now because you can see it's coming down. I hope 1 second please. Make it bigger. Probably that will so we are now on the hourly chart. This is what we see now, and mark this there. So you can see. So I'm going to pause the video now because I got only 2 minutes left for this video, and I'll pause it and then we'll come back to it very soon. Pause the video now. Traders, now as you can see, it's a very slow market, but the price now in our target here, and hope you learned something from this video. It has been dragging on for some time, but finally it's here. We enter at 1259 and the price went down up to this level here, or at 1247 for the S&P 500. And I mean, that's enough for today, but it's not much going on here. As I told you, it's a very slow financial instrument. So I hope you enjoyed this video that you will put into practice in order to trade MACD like professional traders. Thank you for watching, and we will speak to you very soon now. We are the TSTW S08 traders.